when you first got that signal to short, and then you decided to go in there because you noticed by the blue arrows that you did have a couple of prior signals as well. Do you use your scan for it to come up on your radar and get your attention, and then you put it on some sort of watch list, or do you?
Yes.
Okay.
Yes. So when these blue arrows were coming up, what I do is I run the scan, and if something has immediate support or resistance, then I'm not going to enter that day, but I will add them into a watch list to keep my eye on. But what I find is they'll come up in the scan again once they break.
Yeah.
And so I will usually see it in my scan. But on the weekends, I run through my watch list and see if there's anything looking good from what I've added in there, delete anything out I no longer like. So it's something that I will eyeball at least once a week to see what's in there.
Excellent.
Okay, so going over to another trade, this one is nearly identical to the last one. It was a global financial crisis trade as well. So I took back in 2008. It collapsed through a support line, and you can't see the support. It's sort of off the charts, but it is there, and it did have touches. So I entered into this share when it broke through the support level. It came up in my daily scan, and you can see it came up the day prior, but because it was only just breaking through support, I waited, and the next day I got in. It fell very, very strongly and collapsed very strongly, and the volatility increased, and I was in a windfall profit situation where once again I could take windfall action. So I sold half, and it had more than halved in value, so I sold half. Then it continued to fall lower. No, I was still in the trade, and I sold out on Christmas Eve along with the other trade that I just showed. So they were the two short trades that I pretty much had left open just before Christmas, and I thought there's not that much price discovery left in them now. I'm happy to sell out because I'm going that way. I'm having some time with the family now, so I sold out of those ones. But normally I would wait till my stop was hit. But as I mentioned, with short trading, there comes a point where it can't go any further.
Yeah. Yep.
So, and both those trades, so this trade I held for 84 days, the trade prior was 64 days. So I made 67% return and 1,300% on the margin outlay on one, 72% on the other, and 1,400% on the margin outlay, because it was 5% on those two at that time. So let's have a look at another one. This is one where I took some profits on, but then when it broke out again, I pyramided back into it. So once again, it looks very similar. You can actually see clearly the support here because it's closer on the chart. You can see how many times it touched that line. It came up a couple of days prior, but because it had immediate support, I didn't enter it. But once it broke through that support, I entered because that's when it attracts my attention. And it collapsed dramatically. Down day after down day, collapsing, and it had pretty much halved in value, and it did have support at $2, which you can't see on this chart. And as it started to rebound off that line that I have on the chart there, I decided, look, I'm in a windfall profit situation. I'm happy to sell half here, and so I sold half. So whenever there is a large move in a short space of time, that's when my windfall profit criteria goes off. So I sold half. It then recovered slightly, but never hit my stop, because what happens when a share becomes quite volatile is your stop gets a lot wider, because I take into account the volatility with my stop because I'm using the average true range. But then it did fall again, and it actually this time collapsed through support. And when it broke through support, I got another entry signal to buy into this trade, or not buy in, I should say, short sell. So I decided, well, I could take on a new trade. So I pyramided and entered the trade, added to the trade basically, and it fell after that. And I was sold out when my stop loss was hit. So you can see it broke through $1, came back up, and once it hit my stop, I was taken out of the trade. So I held that trade for 103 days, 60% return on the total trade size, and over 1,000% return on the margin. Now, let's have a look at a losing trade, because those trades look fabulous, but not every trade looks like that. So I like to show you what a losing trade looks like. Same setup, everything looks beautiful, you think it's going to be wonderful, but it doesn't mean it's going to turn out that way. So as I said, when you enter a trade, you don't know what's going to happen. So support line, gap with a break of a support line, beautiful candle, entered short. It did fall for the next 2 days and my stop loss moved down slightly. So as I mentioned in the last presentation, I don't always take my full risk size, because if something moves my way, my stop moves my way, and a lot of trades will give me a little bit. But then it came back up to support, fell away, which looked good, came back up, but this time broke through and I was taken out of the trade. So I simply exited because my stop loss was hit. So I held that trade for 17 days, a much shorter hold time. My losing trades are always held for a lot less. Made a negative 6% return on the total trade size and a negative 59% return on the margin. So that's what a losing trade looks like. And you get in, it's not successful, my stop is hit, and I'm out.
Yeah. I've got to say, these example trades that you're going through provide tremendous insight, and I think that was one of the points we got for feedback from the previous videos, was the fact that you actually show some of the trades, the live trades, and even putting some of the trades in there that are currently open. Like, I know you don't put the code so you can see, but I mean, it shows how active and in the market that you are, and really gives that excellent insight into how a professional trader's out there doing it. I suppose on the tail end of this call, I know I've been sort of fortunate to line up with you to do another call for my guys, and I think what I want to do is perhaps I'll chat with them and organise to get them to send some of their questions in, because we had quite a few questions come through from the previous one, and then that can help shape what it is that we're going to do in the next video, try and get some questions answered, and I'd love to even dig in a little bit to the technical analysis side and how you go about entering, because I know a lot of people had questions in that space. So perhaps if we wrap up there, and if people want to follow along with these free videos, they can head over to the onlinetradingmastermind.com. But just wanted to, again, Justine, can't thank you enough for your time. I know you're very busy, and you have an excellent, like I talked about, that work-life balance to make sure that you're not just stuck in front of a screen all day, and you've got a young family that you want to look after. So any time that you do share is much, much appreciated, and I know my guys and girls are getting a lot out of these calls, so thanks again.
That's all right, and trading is a journey. I mean, it starts out like you spend all your time doing it, it takes up all your life, but eventually once you get that plan written, you straight into the place and find something that suits your lifestyle, and you become a good trading that doesn't take up too much time. So as I mentioned, I spent 30 to 40 minutes a day on my trading, but it didn't start out that way. It was a journey that progressed.
Excellent. Well, hopefully with what we can cover, we can try and shortcut some of that learning period. So thanks again.
Thank you, David.